Today to talk about Reliance Industries. And Somit, what exactly happened to Reliance Industries yesterday? Because we've been waiting for this one to rally and rally hard.
For a very long time.
For
Yesterday's move of around 2.7% was the highest move that we have seen for Reliance since July 2023. And after a gap of nearly 6 months, again we have seen Reliance at a life high. Obviously, we have to adjust the Jio's pricing here, and then you get the new high price. And yesterday we crossed that. Now, if you see one technical part, for Reliance Industries, the stock is around 8% away from its 50 DMA, 10% away from its 100 DMA, and 12% away from its 100 DMA. Now, this is important because this means that the downside for Reliance Industries at this point of time, if any fresh investor also invest, could be limited, given that the stock is not too high away or too away from its daily moving averages, which means the downside is now limited. One more thing to notice here is in 2023, Reliance Industries underperformed the benchmark, that is Nifty 50. Nifty was up around 20 odd percent, while Reliance was up only 10 to 11 odd percent. And since 2015 till now, never has Reliance Industries underperformed the benchmark for 2 consecutive years, which means that can it outperform in 2024? Let's find out what are the triggers here for each of the business segments for Reliance Industries. Now, firstly, if you see the retail business, expansion is the biggest trigger here. Now, as its expansion plans unfolds, the recent expansions that the company has done will start contributing on the EBITDA front. Along with this, the company has been doing fundraise via stake sale, which has kept its debt for the retail business also under check. So now the retail business debt has gone up too much. Along with this, the company's digital presence is also rising when it comes to the retail segment. Now, when it comes to the telecom segment, tariff hike is the biggest key trigger here. Along with that, there is broadband expansion and also a steady rise that we have been seeing when it comes to the customer base for Reliance Industries. When it comes to the O2C segment, that is the oil to chemical segment. Now, the business of this segment has been pretty much range bound. 2023 is expected to be a strong year for the refining business. This business has been a cash cow for Reliance Industries and is expected to remain a cash cow for at least the next 7 years. When it comes to the gas exploration business of Reliance Industries, the gas production from this segment has been rising. Gas prices are pretty much stable, and India's gas demand is also on an increasing trend, which means that this business can also turn into a cash cow for Reliance Industries. And when it comes to the new energy business, commissioning of some of its businesses are expected to start in the mid of 2024, and this segment could significantly contribute to the company's earnings from 2025 calendar year as per brokerages. Now, apart from this segmental triggers that we have seen, what are the key other triggers for any investor? Now, if one wants to play the India growth story, then Reliance Industries could be one of the best bets, given the fact that it has exposure to retail, telecom, oil and gas, and now new energy as well. Now, there's always an option left with Reliance Industries to demerge and list its retail and the telecom business. Along with this, analysts are also expecting some value discovery to happen when it comes to the new energy business segment, and CLSA specifically is expecting the company to start its deleveraging mode again from mid of 2024. And lastly, the valuations of Reliance Industries. Now, despite expensive relative valuations that we are seeing for the markets, Reliance Industries valuations are still on the cheaper side. In fact, if you see the company's 12-month forward EV to EBITDA, it's at around 11.6 times, while its 5-year average EV to EBITDA stands at close to 12.3 times. So there are multiple triggers there for Reliance Industries, and yesterday's move could be just one of the display of the fact that the stock has not actually run up, and this could be one of the starting point.